Good morning, Bob Richards here with simplemoneyloans.com. That's simplemoneyloans.com. And today we're going to talk to you about private lending and hard money loans. What's the difference and how are they used? So a private loan is any loan between two people. Let's say I'm going to loan my brother $20,000 to buy a car. That's just a private loan. He's got to pay me back. If I make that loan of $20,000 and let's say I hold the title, now it becomes a hard money loan because I've got collateral. That's the difference. What's a private loan used for in real estate? We have investors that use them for flips, investors that use them to be able to move quickly in the market. For instance, if they see a house that has hit the market and it's a great deal and they want to take advantage of it right away before somebody else gets it. To purchase a rental property, let's say they're going to buy a property, do a little work on it and then rent it out. Or to overcome bank restrictions. Let's say the bank is asking for some particular requirement like proof of income or a credit score that they just can't provide. Or we do have some investors that borrow from us for business capital. Let's say they've got a paid for home, they need some money for their business. So they will borrow against that home from us to help them with business capital. What are the benefits of private lending? We can move very quickly. Although our typical loan takes us 48 to 72 hours to fund, we have moved as quick as 24 hours, where a bank will typically take 30 to 45 days to loan on a property. The other thing is we don't require an appraisal. We don't require an inspection. We do that ourselves. It's a free service we provide in making the loan, where a bank's going to require those items and a bank is going to charge you for those items. What are the typical terms of a private loan? Well, most private lenders charge 3 points up front. So if you're borrowing $100,000, that would be $3,000 up front. They're going to charge you an application fee that's usually $9.95, and then they'll charge you interest of 10 to 15%. They will loan on the purchase price and sometimes on the construction. Most of these loans are interest-only loans, which makes it really good for the investor because they're not having to pay principal. This is typically viewed as a short-term loan to help the investor buy the property, rehab the property, put the property back on the market, and sell it, typically 4 to 6 months. Most private lenders want to loan 70% of the purchase price or the value of the property and require the rest down from the borrower. So private lending is flexible. Depending on your experience, you can get different terms. So, for instance, a new borrower may be required to put 20% down and fund the rehab costs themselves, where an experienced borrower or investor may get the purchase price and the rehab financed all together by the private lender. These decisions are made by the private lender. So an experienced investor is typically someone that has flipped 2 or 3 properties in the last year. Some people borrow personally and some people borrow through an LLC. This is your first or second flip. My advice would be just borrow the money personally. If you're an experienced investor, you know about LLCs. They provide you a little bit more protection, but they're a little more complicated to use. Our typical loan is around $80,000 or $90,000. Rehab cost is $30,000 to $35,000, and the sale price is somewhere between $185,000 and $195,000. So if everything goes as planned, an investor can make $30,000 to $40,000 on a flip, which is really, really good. So that is what we do. We're a private lender here in Augusta. We'd love to help you make some money. Our website is simplemoneyloans.com. Our email is simplemoneyloans@gmail.com. And our phone number is 706-306-4602. Please contact us and let us help you make some money.